Then yesterday I was up over 1.45, almost 1.5 million. End of market, 1474.8. I got a lot of messages. A lot of people are making money this week. I like you to be making money every week, but I'm excited you're making a lot of money this week, so that's a lot of fun. I had countless phone calls, texts, etc. Mostly texts. People write me, Derek, I hit $2 million net worth, hit a million, hit a million, hit a million, hit a million, made $1 million in the last 7 days. Reached $8 million, $8 million net worth, et cetera, et cetera. So I'm excited for, you know who you are. If you're one of those people, you know who you are. And I'm excited for others who had other notable victories. It might be smaller money. You might have had a notable victory that was smaller money in the short term, but you're on track to do that. So share a couple of those stories in here today. There's a lot of those. The market's been a dream. It's been a gift from the heavens. I'm looking on here. Jack says up 25% in the last week. Up 25% in the last week. That's not a joke. 25% in a week is a lot of money. 25% in a week is a lot of money. I probably maybe I'll share a couple things. And Travis has been posting some, for better or worse, whether it's smart or not. I've had Travis help me post a few of these graphics on my Instagram, and I don't know, in the last 3 days, let me go find some of those. Where were we at 3 days ago? I was up about 700 and, 750 or something. 750, what does that say, 757 point something? There we go. 757 and change. So almost 757.8. I'm just going to call it 758 because it's enough fucking money that I can round it up a few $200. So 758, that's a couple days ago. Then yesterday I was up over 1.45, almost 1.5 million. End of market, there we go. That's a pretty picture. End of market, 1474.8. Yeah, 1474.8. And then today, I was up more in the middle of the day, but that's okay. Sometimes the money gods take a little bit back. I was up 667 at one time. Sometimes the money gods take a little bit back for themselves, and that's okay. So at the end of the day today, we're up 582.5. 582.5. But earlier in the day, I was up 666.5, almost 667. So, I don't know, man, that's over 2.8 million. That's over 2.8 million. That's like 2,815,000 in 3 days' time, in 3 business days. So in 50 hours, 50-ish hours. And I don't know. On one hand, do I get super excited about that? I don't know. I'm pretty happy about it. But what's more exciting is there's more money coming. There's even more coming. This is not the peak economy. This is not the best economy. We're not living in the best possible economy. So I think there's more opportunity coming. And I don't know when it's going to end, but we're not there yet. There's more opportunities coming. Let me show you this last one. I had to block out a percentage, but I'll show you this last one that I just screenshotted. End of day today, about 583,000. So about 583 at the end of the day. About 583,000. So 2.815. I was up over 2.9 in the middle of the day. The money gods took a little back. It's okay. Money gods got to give their piece too. So I'm looking at the screen over here. Daniel G says 18% returns in 1 month and 40% in 11 months as a beginner. Yeah, well said, Daniel. different Daniel. It says up 155% since my initial investment. What else we got here? Let me scroll through some of these. Killian says, I had several 4-figure days in the last weeks. That's not quite 7 figures, but getting real close. Still making more in a week than some of my student peers make the whole year. Shout out to Markets Mastery. Yeah, shout out to you, Killian. Shout out to both Daniel and Daniel as well. Max says, I'm up a little over double my initial investment from 800,000 to 1.9 million so far. Thanks for your teachings. I'm excited. Andre says, I'll go with the first question, and I might chat a little more in between here. But Andre says, hey, Derek, big congratulations on huge win with REITs and real estate stocks recently. You know, I tell you people all the time, and most of you are already in the real estate program coming up. We start the real estate program 2 weeks from today. We start Real Estate Riches, which is a kind of a corny name. I think Real Estate Riches is a bit of a corny name, except that's where most motherfuckers make their riches. It's kind of a corny name, but Real Estate Riches, most people get rich in real estate. Over 90% of millionaires made at least a part of that money from real estate. So that's where, the real estate is where where the biggest gains are made for the most number of people that have significant wealth. And on the stock market, it's number 2. So I love the stock market, but even in the stock market, there's a lot of things that I know about real estate, a lot of things I learned about real estate that I implement that are paying for, that are making a lot of the gains. So that real estate information is really, I can't say enough about it. If you don't understand that, if you don't understand the real estate market, you're missing a big piece of the economy. You're missing that. That's where most people have their wealth. You're not going to understand when people are going to put more money into the stock market or take it out. You're missing a big piece if you don't understand that. I hope you don't do that to yourselves. But Andre says, hey, Derek, big congrats on huge wins with REITs and real estate stocks recently. MAC earnings call today was amazing. Traffic in malls has increased, just like you said. Also, thank you for the class, your insights, and practical advice. My question is, with which assets in your portfolio do you now consider overvalued, such as Macy's or Mac? Mac meaning Mace Rich. And in general, what techniques, indicators do you use to determine when stocks are overvalued to exit the positions? I don't think Macy's is overvalued or Mace Rich. I think Mace Rich is, I said it a long time, and I used to say it's going to be more than a $40 stock. And then post-dilution, I think it's still going to be more than a $30 stock. And, it was 15 recently, and now it's about 22. And, people didn't like it when it was $4 and change. They didn't like it when it was $5. They didn't like it when it was $6. And now some of the analysts, now they're starting to like it a little bit. Now that it's over $20, oh, Mace Rich, we should take a look at that. So now there's a lot more value there. Why am I so confident? Well, David Simon is probably the person I think David Simon is the person on earth that knows more about malls than anyone else on earth. David Simon of Simon Property Group, the CEO of Simon Property Group, which, this is a family business that's been around since the 1960s. And, Mr. Simon grew up in that environment. He knows everything about malls. I don't think there's one person on earth that's been more successful with or knows more about high-quality shopping centers, what to buy, how to run it, and what to sell and what to avoid. And I think he's a brilliant person. Shout out to David Simon. Probably you're listening at home right now. You just signed up under a covert name. I understand. It makes perfect sense. But David Simon said on the call on Monday, on their earnings call, he said there's not a Class A property that's not worth at least, or the way he said it actually, so there's not a Class A property that wouldn't sell for more than a 5 cap rate, which means, 20x earnings. So what Simon's saying is Mace Rich, which is mostly Class A malls, should be trading for at least 20 times earnings. Do you think this is the peak earnings? No, they're just recovering. Mace Rich said that I think they're at 90.2% occupancy. Simon's at 92.8%. Both of them need to get back to about 95%. They don't need to. They're profitable as they are, but they will end up inevitably back at 95%, maybe higher. You don't want to be at 100%. If you're at 100%, it means somebody wants to rent a place from you, or they pay you a premium and you don't have it available to rent. So it means your rents are too low. So you never want to be at 100% occupancy. So, I mean, David's made a comment, I think 2 earnings calls ago, that he'd like to buy more Class A malls. The only Class A mall portfolio is Mace Rich. Simon already bought Tobin. Simon had the 3rd biggest concentration of Class A malls. Then they bought Tobin properties. And Mace Rich is the last significant portfolio of Class A malls out there. So David Simon's basically signaling to you that, like, if Mace Rich went back to 2019 numbers, which they're on their way to do, that, the stock, even diluted, the stock should be, about $42. If you look back at their previous earnings or payouts, actually he says it should be at least minimum. If you do the math on what he did say about a cap rate of 5, what he's really saying is it should be a minimum $42 stock. Well, it's at 22. And the guy that knows more about malls than anybody else on earth is telling me it should be worth 42 if they got back to their 2019 numbers. So Simon would pay more than $22 for it right now. He'd love to buy it for 30. I'm inclined to think that I was right the first time and that I'm wrong when I say, well, at least 30. I can say at least 30 and hedge, but I think it's probably worth more than that. I think David Simon would agree with that. And I'm one of the biggest shareholders in the world that isn't an institution, which, that kind of sounds funny when I say that, but it's true. Is I own 500,000 shares of that stock. So when that stock moves $2, I make $1 million. The other day I was up $1.25 million. Yesterday I was up $1,260,000 on that one stock. And I don't think it's overvalued. You might have your own. You make your own decision and you sell it if you want to. I don't think it's overvalued. I think there's. I might make another $10 million. I might get another, $20 a share times 500,000 shares, and collect distributions. They pay 60 cents a share right now in distributions until they get their balance sheet worked out, and then they can raise that significantly. But it's part of their debt covenants with their lenders. So, in the meantime, while I sit around, they pay me $300,000 a year to just sit on the stock. So I get paid $300,000 in dividends, and then. If they raise the dividends back to where they used to pay out $3 a share. So even diluted, that's $2.10 a share. So I'd get $1,050,000 if they got back to that. So, and they will. I strongly think they will. Every indicator I see says that they will. Analysts are full of shit. If analysts knew anything, they'd be hedge fund managers, not analysts. So, I read some of these analyst reports. I've talked about this numerous times in the past, maybe not enough on this specific program, but the first thing you should do when you look at an analyst report, first thing is say, do they own the fucking stock? Or if they're talking shit about the stock, are they shorting it? So first thing I want to read, do they have a position? If they're going to have an opinion that's positive or negative, I want to know, do they have a financial position? Are they putting their fucking money where their mouth is? And you'll see about 85% of the time they're not. You'll see that they're not, that they got a lot of opinions. These fucking analysts are clowns. They're like, English majors or literature majors or something at university. And they went to a fancy school and they got a fucking English degree, and they write a lot of bullshit that they don't even know what the fuck they're talking about. So when they say, oh, it's, can it go any higher, but they don't own any, it's like, dick face, you ain't got $100. You wouldn't buy a share. You wouldn't buy a share so you could put in the fucking report that you at least own some? Or they're talking bad about something. So why aren't you shorting it? If you're such a fucking wizard of finance, why aren't you shorting the stock? So I don't give a fuck what the analysts say. The analysts have been wrong all year. Simon Property Group has tripled. Mace Rich has more than quadrupled. And the analysts were wrong last year, and the analysts, many of them are still full of shit. And even when they say nice things about companies I like, I'm like, I still take that with a grain of salt. Be careful about it. Don't blow smoke up your own ass. You got to be able to do your own analysis. If you are or on your way to be a millionaire or multimillionaire, probably going to want to spend time with my clients. Probably going to want to have a personal relationship with me so we can accelerate that process, get you living up to your maximum potential, earning your maximum wage. You're going to want to click that follow button. You're going to want to click that bell and get notifications. Tune in every Friday. Tune in every Monday. You're going to love what you see. I look forward to having you as a client in the future.